With more than 6,000 small and microcap companies listed, if you're looking for the next Apple at the earliest stage, then Channel Check truly is the orchard. The listed companies support Channel Check, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for Channel Check so you're always up to date on what's going on at the small and microcap data place. Welcome to the Transportation and Logistics Forum, a NobleCon online investor event, presented by Channel Check and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on Channel Check. This presentation features Pangaea Logistics Solutions, NASDAQ ticker symbol PANL. Following a brief overview presentation from Interim CEO and COO Mark Filanowski, Managing Director Mads Petersen, and CFO Gianni Signore, Noble Research Analyst Poe Fratt will moderate a Q&A session. With that, I am pleased to present Mark, Mads, and Gianni.
Good day. Thanks for joining us. I'm Mark Filanowski, Interim Chief Executive Officer of Pangaea Logistics Solutions. Some of you may already hold some of our shares. Some of you may be considering investing in the shares of Pangaea Logistics Solutions. You may have already listened to us explain our position and strategies in the dry bulk market. You may have seen some of our presentations. The one point we try to bring across when we talk to investors and potential investors is that we think we're a little different than most companies that might be identified as our peers, and in a good way. We have a business strategy that is sustainable and long-term performance that demonstrates our difference. Today, we'll go through our updated standard company presentation, which is meant really to be a vehicle for some broader questions and discussions about the company. With me today are Gianni Signore, our Chief Financial Officer, who's been with the company for 3 years, for about 12 years, and Mads Petersen, who's been with the company just about the same amount of time. Mads runs our Copenhagen office, where our Ice Class 1A ships are commercially managed. And he also, in Copenhagen, we also run a big dry bulk strategy from that office, as well as one in Newport, Rhode Island. With that, let's please bring your attention to our safe harbor statement, which might be summarized by the phrase caveat emptor. Gianni and Mads will take you through the presentation now. Thank you.
Thank you, Mark. As mentioned, my name is Mads Petersen. I will be taking care of the presentation that looks a little bit deeper at an overview of our business and the strategy that Mark touched on briefly before. Pangaea Logistics is headquartered in Newport, Rhode Island. In addition to the corporate headquarters, we have a chartering operations in Copenhagen and in Singapore, and a technical management operation in Athens, Greece. This geographical spread of the offices enables us to operate efficiently in all the major time zones of the dry bulk market, and extends our reach outside our usual niche areas that we will be touching upon later. We as a dry bulk operator and owner, we offer a wide range of services, and as Mark said, we will try to focus in this presentation not so much on the very basis of dry bulk operations, but rather what sets us apart from most of our publicly listed peers. The Pangaea business model rests on 4 pillars essentially. Number one, on the top left in your screen now is the Ice Class niche, which will be covered in a little bit greater detail later on. But essentially, the owning and operation of ships with Ice Class capabilities that enable our ships to call ports during this time in the winter that other ships can't, simply because they are not built to the same high specification as our Ice Class ships. In addition, we have our conventional dry bulk operations model, which we call a cargo-focused owner-operator. That is the primary business of our non-owned fleet of ships, in addition to our chartered-in vessels. And we typically tend to focus on what's called backhaul trades, so less liquid, more difficult to develop trades that also, better cater to our special capabilities and experiences as a company. And then one of the newest additions to the business is our port projects and logistics services, which is essentially taking existing customer relationships and rather just focusing on carrying their cargo from point A to point B and not really caring what happens before or after. We sit down and engage with our customers to develop a loading and also sometimes discharging facilities to enable us to get a deeper relationship with our customers and essentially create a cooperation and higher premium generating business rather than just solely the transportation. We simply become a bigger and more important part of our customers' supply chain, and this is a part of our business that we have very high expectations for. And then ultimately we have our own technical management office in Athens, Greece. This division takes care of the technical management and crewing for our non-ice class fleet. So a little bit more details in what is it really that sets us apart from our peers. They essentially are owning and operating ships and fixing them out on time charter to someone like Pangaea Logistics, for instance. We don't operate the same way. We use our own ships directly with the either producer or end user of the commodity that we are carrying. And in addition to just owning ships, we also have a dynamic chartering model where we will charter in ships as needed and as depending on the opportunities we see in the market. So this means that while we only at this point might own soon to be 25 ships, the fleet we operate is actually closer to about 60 vessels. So we have a core fleet, and then in combination with that, a more dynamic chartering model that enables us to better serve our customers year-round anywhere that they have demand for it. We have generally the overriding theme of our strategy is focusing on niches. So the ability to be experts in certain trades rather than necessarily just be generalists we try to do everything. We want to get into those difficult and hard to do trades, and through that niche focus and through those relationships develop long-term customer relationships and ultimately also long-term contract coverage, which allows us to be protected from some of the downturns that we tend to experience in this business, while not at the moment, but not in that distant history. And then the natural extension of this strategy is, as I talked about before, the project and the terminal services, where we again work closely with our customers and develop additional services and a more sticky relationship, and essentially they are able to derive a premium that we otherwise wouldn't have. So this is a snapshot of our fleet today. It stands by Q1 next year. We will have our most recent ship delivered that will be renamed the Bold Concord. And this is a mix that, as you can see here, consists half of non-ice class ships and half of ships that has ice class to varying degrees. We have in this slide tried to create a little bit more insight into what does it mean to have an ice class ship. Essentially, it's taking a conventionally designed and conventionally built ships and then actually upgrading it to be able to trade in the conditions that you can see in this slide. Essentially means that we have a reinforced steel hull around the vessel and some additional engine power to make it possible for the ships to navigate in these ice-covered ports. And again, this is something that because this is a very, very small part of the dry bulk fleet that can do this business, is something that allows us to get extract a premium from the market because you severely reduce your competition and also get a different relationship with your customers. So it avoids transitions from the very sort of traditional transactional relationship that is seen in shipping and into some more like a partnership with long-term commitments from both sides to develop an actual service and actually help a customer with a pain point in their supply chain. This slide, we have included the current working stevedoring and logistics projects, in addition to a project we did in Greenland. All of the projects you see are with existing customers, actually, where we have sought to expand onshore rather than just focusing, as we mentioned, on carrying cargo. We actually help them load or discharge the cargo, and in various of these we operate in different joint venture partners. So the idea with this is, in addition to creating a standalone business around stevedoring and logistics, is actually also, of course, ultimately to try and drive more cargo over our ships. So combining ocean freight with stevedoring and logistics, offerings in these key markets for us. And then we just want to touch on our sustainability initiative. We welcome you all to visit the website and download our ESG reports for the last 2 years. We acknowledge our responsibility as a global, and we consider ourselves a leading shipping company to act and conduct our business in a safe and sustainable way for the areas and the people we come in contact with as our ship trade worldwide. We are very transparent in terms of our reporting of our safety statistics that we are very proud of. And in addition, as a publicly listed company, you can find all our governance details online, all the policies and further details into this. And yeah, I think. And here I turn it over to Gianni, our CFO.
Thanks, Mads. So I'll walk through the financial portion of our presentation, and to start off, this slide is really showing our current fleet. So as Mads mentioned, we have 12 owned ice class, we have 12 owned standard bulkers, and then on top of that, we also charter in an additional, as of today, 35 vessels. Those 35 vessels are chartered in on relatively short-term basis, so it allows us to react quickly to changing market conditions. It gives us a variable cost structure with a significant portion of our fleet, so we can charter in vessels when we need them for cargo demand, and we can flex that as the market changes. And then in Q1 of 2022, we will take delivery of a 2009 Panamax, which will bring our own fleet to 25. And then speaking of acquisitions that we've made over the past 12 months, from October of 2020 through October of 2021, you can see the number of ships we've acquired, and we believe timed well. We've acquired $95 million of vessel asset value. We've deployed $34 million of cash, and we've added on about $60 million of debt. If we look at the timing of these acquisitions, from the point of purchase through today, we've seen an appreciation in market value on most of these ships. Our most recent issued financials were for Q3, and our results were historic highs. Our adjusted EBITDA was $33.6 million, adjusted net income of $21.7 million, and EPS of 48 cents. You'll see how that compares to historical results, and you can see it's one of our highest performing quarters on record. Within those numbers, we did have an unrealized gain on derivative instruments of $5.3 million in Q3, but we adjust that out of our adjusted EBITDA and net income. And our expectation as the year closes out, we'll have additional mark-to-market impacts in the P&L, but that'll be dependent on really where the market is as the year ends. We operated a total of 58 vessels on average, and we carried 7.7 million metric tons, completing 136 voyages. So it was an active quarter. Q3 covers our summer ice season. It's one of our most active quarters from a vessel fleet size and number of voyages performed. Within the quarter, we did take delivery of one secondhand vessel, and then we took delivery of our post-Panamax vessel within Q3. We paid a quarterly dividend of 3.5 cents, and we also paid the first installment on the acquisition of our JV partners for the 6 ice class Panamax joint venture. This slide really is the takeaway from this slide is just to show how active we've been throughout various market cycles and how we've slowly but consistently grown the fleet. The numbers at the top of the chart represent the number of vessels that we acquired within those years. And we slowly but consistently grew the fleet over what you can see is a very volatile market. But with that volatility, the company was also consistently profitable. The way we've developed a strategy and how Mads has discussed our view on the market and our strategy to remain profitable, you can see is evident in this slide. With the exception of 2014, which were mostly impairment losses driving that loss, with the exception of that, we were operationally profitable and even generating positive EBITDA and increases in revenue. The last slide is really just the outlook of our TCE performance historically, and then looking ahead as we look into the fourth quarter. Through December 7th, we've earned a TCE rate of 32,500, and we've performed approximately just over 4,000 days through December 7th. With the quarter coming to a close, it's a good indication of where we'll be and expect to be for the rest of, or as we close out 2021. With that, I'll turn it back to Poe for Q&A portion of our presentation.
I'm drilling down a little bit more in your unique strategy. If you could compare, and contrast your strategy relative to other companies, I think you sort of hit on it, but is it the way you approach, the asset base, a little more asset light than others? Or is it the flexibility of the cost structure? What do you think the key ingredients of the unique strategy are?
Well, you hit on one, Poe, and that is that we own only about half of the ships that we use in our operating fleet, and we use that chartered in portion as an opportunity. Where we see cargo opportunity, that's the place we're always focused, is on cargo. We can take in ships to move the cargo that provides us with profits and assimilates with our business plan. We're a little bit different than the guy who owns 50 or 60 ships and has to move up and down with the market. We're flexible. We can increase our fleet. We can decrease our fleet, as long as the cargo is there for us to move. So it's the cargo focus, and it's the sort of the niche focus, as Mads tried to cover. We want to hold on to as much of the cargo transport as possible. So if we can get into a venture that is involved in the supply of cargo to the industry, and be on the other end in the discharging process, and maybe even the distribution process on shore, that gives us a little bit extra length with that customer, gives us a little bit more chance at additional margin, and gives us a chance at more throughput on our own fleet.
Okay, great. Yeah, it's just more beyond customer retention. It's really adding added services and value, right?
Yes.
Yeah, I think
and then,
one thing to add, Paul, on that is also it's about the balance, right, that we try to maintain versus some of the other publics that are out there, meaning the fleet versus the cargo and how we view the combination. Really, the fleet is to service cargo needs and client demand, and we're trying to add value for them, utilizing whatever assets we have to.
And we've in this kind of market where the market moved up so significantly, traditionally you used outperformance relative to TCE rate as a good measure of how you're doing. It's tougher in a rising environment. But frankly, what financial metric do you use to measure your strategy and how effective it is?
We're constantly measuring ourselves against the market. I think even in a market like today, where we're maybe a little below the market, it's still the market that we need to measure against, right? If we're a little bit below, it's because we operate a little bit differently. We're a little bit, we think, a little more sustainable because we've got a contract base that provides us with a floor, if you want to call it that. It provides very good earnings, but maybe not as high as where the market was over the summer. So even though we're trailing the index a little bit in the third quarter, I'm not quite sure where we are in the fourth quarter yet, but it's still pretty good numbers.
Yep, absolutely. Can you talk about the fleet renewal program and just in the context of, you've expanded the fleet not only through acquisitions of assets, but also the acquisition of the joint venture and then building new assets. Can you talk about what's really driving that? Is it opportunities or is it your view on the market or a combination of both when you look at the fleet renewal program?
Well, the fleet renewal program came about a couple of years ago when we started. It wasn't such a great market. We had some older vessels. There were some opportunities to sell those vessels and wait for the right time to go back into the market to replace them with newer tonnage, more efficient tonnage that has less emissions. Though that was really, I guess, maybe a market-oriented purchase. We will always want to have ships that are exposed somewhat to the market, but also are addressing our contract base requirements. The new building process, we probably wouldn't have done that without this contract support from our major customer, Baffinland, to carry iron ore out of the Arctic Circle in the middle of the summer. They made a commitment to us. We made a commitment to them. It's worked out very nicely for us. The ships will be used approximately a third of the time in that Arctic business, earning premium market rates. And then the rest of the time they're available to participate in more shorter term business. So that was really the thinking behind the new building deliveries was to support our customer and their needs.
Okay, maybe we could talk a little bit more about the ice class, presence that you have. You're the leader in that market. You sort of alluded to it, Mark, but when we look at the ice class vessels, what is the dynamics? How is it different than the rest of the dry bulk market? And how does that play as far as either rate premiums or longer term contracts or just stronger customer relations, or just if you can give us a little additional color on the ice class market, that would be helpful.
Sure, Mads is the best to address that one, I think.
Thank you, Mark. And yeah, great question, Poe. And you basically all the three things you mentioned there at the end is in play, right? The ice class market is a niche market. There's not that many ships out there. Actually, Pangaea now in the Panamax size segment for 1A ice class ships, I think we own I don't know, 85% of the ships that are available in this segment. And of course, as you mentioned, we are market leader in this niche. And of course, what Mark mentioned with the new building program, and also in addition to buying out a JV partner at the end of last year, all contributed to increasing our presence in this segment. And the way it works commercially is that some of it is there's of course a correlation to what happens in the spot market, but there's a cushion here, simply that when the market, like in the times when the market has been really low and everyone is taking, price takers at, I don't know, $4,000 or $5,000 every day, that is when the strength of this strategy with the ice class ships comes into play, because we are cushioned from that. We will have a higher earnings in a low market and also in a high market. I mean, we see it now that the winter has started early in Europe, and there's a rush out to from our customers to cover now, and we are fixing. Just today we fixed a significant premium to what happens in the spot market, right? So yes, there is a premium, but more importantly, when it's not really an issue in this type of market, but in the times where the markets have been really struggling, we don't have to face it to the same extent as the people who are running around and operating conventional type tonnage, right? There's a cushion in our earnings simply. And again, that is because there's a premium in the spot market, but also the ability to attract customers in longer term contracts, because they have a need for this. And as Mark said, similar thing with Baffinland, it works well for them, and it works well for us to have a little bit more sort of a longer term structured relationship.
Yeah, and if we could talk about the potential for carbon emission rules, regulations that are coming up starting in 2023, what impact do you think that will have on the market overall? And then how are you positioning the company to essentially comply with those regulations?
Well, a part of the fleet renewal was driven by these upcoming regulations. We've got ships now, and the ships that we've added will perform better under those regulations than the ships we sold a year or two ago. The new building ships that we were taking delivery of, just took the delivery of the last one last week. They will already comply with the requirements. So, older ships will be less competitive, but with our fleet, they'll still be in the market. We'll still be able to earn good money on them, even though we may have to reduce the power. Reduction of power doesn't necessarily mean we're going to operate every day at a lower speed. It means that the power has been reduced, and where we don't have to go full speed, we won't. The regulations over time will tighten. I think everybody agrees with that. Everybody sees that coming. And over time, the world fleet will have to be renewed.
And if we could just talk about capital allocation, as Gianni mentioned, you've acquired, 95 million of assets over the last couple of years. You've deployed, 35 million of capital, or equity capital, I guess is the way to say it, or cash. Can you talk about capital allocation going forward? And then also, it's worth mentioning too that you're going to start the year with close to a full fleet of 25, just given the timing of not only the new builds deliveries, but also the acquisitions you made last year. So, if you could also discuss sort of the outlook in 2022 on, your shipping days, or however you'd like to mention or measure that.
Yeah, we took on a lot of new ships last year, the 4 new buildings, 4 secondhand ships, the effective 2 ships we added with the joint venture acquisition from our partner. It's a lot of ships, it's a lot of capital we put to use. Coming year, I don't see us being as active in terms of the market itself. We think we're feeling pretty good about it. Don't know if it's going to be a repeat of 2021. It's hard to repeat because it was a pretty good year. But supply seems to be in the right place for owners, and demand seems to be gradually increasing with overall world economic activity. The only questions are China, of course, it's always China. What's China going to do? Are they going to ramp up requirements? They're going to tamp down requirements. And I guess congestion. And if the world is able to release the fleet that's tied up in congestion, what impact that might have on rates? We don't see that going real far, real fast.
Yeah.
One thing that was not on that slide showing our acquisitions, what Mark mentioned, is the 4 post-Panamaxes, new build. And the reason it wasn't is they were contracted, obviously, a couple years ago and the build process, but those were delivering throughout 2021 into a good market. So if we include that, it's really almost $300 million of assets that we've acquired and that we're deploying and using and positioning ourselves for what we think, given what we see in the supply of vessels and and what the overall demand will be in the market. We think we're positioning ourselves for that, better outlook for 2022.
Now, supply and demand do look pretty good. There's always going to be fluctuations, whether it's seasonally or other news. But can you talk about, capital allocation? 2022 is likely to be less active from an asset standpoint. You're paying a dividend that you've increased a couple times. And can you just talk about sort of the priorities and whether a stock buyback potentially plays into that capital allocation equation?
It's funny, Paul, as the stock fluctuates, with the shipping markets and with the stock market, we're in a constant flux between, a couple of years ago, we said we were going to buy some stock back. We put together a plan. We didn't use it because the stock started to move up again. And when the stock moved up, we said, well, if it keeps on moving up, maybe we can actually issue some shares and figure out what to do with that cash at a good price. But that we haven't utilized, the ATM. We're constantly looking at the dividend, what we can do there. Every quarter, the board discusses it, looks at the cash balance, the cash projection, and I'd imagine we have a good discussion at the next board meeting as to what the dividend will be for the next quarter, for the coming year.
Yeah, and 2021 was a transitional year, I think, for our stock. We've always been hesitant to buy back shares because of the ownership of our stock. But if we look at the liquidity and the trading more recently, especially in the second half of 2021, it presents a different outlook for us, and I think it gives us more opportunities to consider a share buyback or to consider other programs that we've had them in the past, but really it was that because of the change in our stock, we'll obviously consider it more so.
We look at capital allocation, and one of the things with capital allocation is working capital. And in this kind of market, it takes a lot of working capital to charter in 30 ships every day. We've got hire to pay and bunkers to buy, and we await our collection on time charter revenues. So it's the charter business is good, it's profitable, but it takes some working capital that's sort of invisible to the casual observer.
Yep. And Gianni just did sort of mention it, but the unwinding of Cartesian's position, clearly will help trading liquidity go forward and increases your public market float because of less. I guess they had a board member on for a while. So can you just talk about sort of what you're seeing in your shareholder base, and what do you think from a standpoint of the biggest question mark looking at 2022 is for shareholders or prospective shareholders?
Yeah, well, Cartesian was a longtime holder, and they were a very supportive investor in the company, and they helped us sort of make our way from a private company to a public company and remained supportive throughout. But ultimately, they needed to get out, and they finally in 2021 had the opportunity to do so. and they're fully out from a 40% position down to about a 30% position, and now they're out. So those additional shares are trading in the market. We're seeing, you know, a higher daily trading activity. Liquidity is much improved, and we're seeing some long-term investors take positions in the company, which we're happy to see that. I think shareholders expect us to continue to, you know, operate the company as we have. We've been profitable. We've generated value. We've never, you know, destroyed shareholder value. We've maintained it and continued to grow it. And I think we'll continue doing that, right, for 2022 and beyond. And our strategy sets us up to do that. So we'll continue managing this business like we always have, and our strategy really doesn't change. And we try to maintain profitability and then eventually return it to our shareholders.
Mark, Mads, and Gianni, we really appreciate your time. Thank you for not only a great presentation, but your Q&A. It's really helpful in helping understand the consistency and the predictability, hopefully, of the strategy. Thank you for participating, and we thank you for your time.
Oh, thank you very much for your time, all your great questions. Always appreciate it.
Thank you for joining us for this NobleCon online investor event presentation, brought to you by Channel Check and Noble Capital Markets. Visit our YouTube channel for more video content, including interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and microcap companies listed.